would you like to be able to build generational wealth with real estate impact investing? Jesse Sales will tell us how. See, he is the CEO and co-founder of Impact Growth Capital. So, Jesse, tell us, how can entrepreneurs build generational wealth with real estate impact investing?
Welcome to Awakened Titans podcast with Lily Patrascu. Mind-blowing conversations with influential business titans sharing how you can manifest abundance, love, joy, success through quantum awakening, quantum manifestation, quantum healing, quantum miracles, exponential business growth, and innovative products and services.
Awesome. Great question, Lily. It is super simple. It's not. I'm sorry. It's not simple. But it is possible. You know, we look at the statistics. You see that 90% of millionaires own real estate. So that's why I started doing it in the first place, and it's really the most effective and the best way to do it, in my opinion.
Okay, so give us the blueprint for how someone would start to build generational wealth with impact investing in a property.
Yes. Okay. Perfect. So let me tell you a little bit about my backstory. So I did the military 11 years, got out. You know, I flipped homes for a long time. I was always in a house that was constantly being remodeled. You know, sleeping on the living room floor because the bedrooms didn't have ceilings or something like that. But my dad always had a saying, you know, we're not white trash. We're just poor, right? So that meant that we're not going to be okay with our situation. And I saw the power of real estate very, very early on. And I saw that in order to get ahead, you kind of have to do this, where you're constantly moving forward, constantly changing your own stars, if you will, to do that. So we created this company 7 years ago, started doing something called Syndications. And for your listeners out there that don't know what that is, that's if you get a group of people together and they all say, here's $1,000, you know, go buy something for me, make me some money. So we were that person. So getting out of the military, my brother and I, my business partner, co-founder, we convinced a lot of people to give us some cash. And we went out and bought a mobile home park to that syndication. We do all the work. All of our partners truly get passive income, right? So they actually just sit on the couch, sit on the beach. I knew a guy who just liked to hang out, be a barfly. More power to you. He was making cash every single quarter, getting paid out from us. And he owned a real asset. You know, today you look at the stock market and it's up and down. It's crazy. Every day is a new day. No one knows what's going to happen. But real estate's a real thing. You know, it's the value is always going to go up. And that's what we've done 20 something times now. And the impact investing piece come in when we truly started to see, you know, what we could do and how we could affect other people. Because when we buy, when we buy these real estate assets, you know, you have real people living in them. And when I hear people talk about impact, a lot of times it's like solar panels or wind farms and cool. But the single mom with kids who's struggling to get by, like 66% of all other Americans that are paycheck to paycheck, they don't care about solar panels on the roof. They just want to have a safe, clean place to live.
Thank you. Tell us how, what's the difference between real estate impact investing versus real estate investing? Like, what's the difference there? What would someone need to do to actually make a real impact?
Yeah, a great question. So in the beginning, you know, we're kind of floundering around. Luckily, it was COVID timeframe. Luckily, unluckily, right? A lot of people struggled quite a bit after COVID, especially real estate investors. But during that time period, there were a ton of different groups, organizations that were doing a lot of outreach. So I quickly discovered that, you know, there's all these charities, but they act in silos. You know, this one's really good at emergency rental assistance for single moms. This one's really good at charity. They're cancer, you know, outreach. So what we started to do, and we created our own nonprofit now that focuses on grabbing all these different silos, crushing them together and making them all work together to create this program that actually supports our residents. So in a quick story, let's talk about Gary. Gary lived in one of our properties in Memphis. He had a rough life. You know, he got out of the military, he got into drugs, couldn't hold down a job. By partnering with a group locally in Melrose, that was the name of the property, in in Memphis, we were able to get him support. We were able to get him case managers that helped him find a job, that helped him stay clear, that helped him actually move forward in life. Most people, you're collecting rent. Hey, you're late on the 5th, you're evicted on the 15th, right? We do it differently because we see the holistic approach of, hey, if I support our residents, if I'm able to find them jobs, if I'm able to find them support that they need, it's going to come back and help us as well, right? Because now I have people that want to stay. I get good people. I get clean, safe people that aren't going to cause issues, So I truly believe in the impact portion is the most important part of what I do.
Thank you. Tell us more about the blueprint of creating generational wealth with impact investing. What are some important steps for someone to follow when they're starting from scratch? Let's say they are making 100K per year income. How would they start kind of generating that generational wealth with so little?
Yeah, absolutely. That's more than I had when I started, so it's not that little. We think about, a lot of people have this mindset where, I don't make enough money, I can't get started. Which makes sense, right? Right, a $20 million apartment building, that's impossible. But you can, and it's through syndications. That's the easiest way to get into it right now, is by partnering with other people. Even if you own 10%, but 10% of a $50 million project or a $20 million project is not bad. So that's the blueprint to get started, is to look into different syndications, different groups, find a way to kind of put together something. I just went to YouTube University for a long time, read every book I could. I'd kind of figure it out, but get started. What I usually see from people that are like, I can't do it, they have this mindset, is because they're so scared to get started until they know everything. I'm very big about build the plane in the air as you're flying, right? Figure it out. So blueprint for me would be get some education, baseline, and then go to networking events, talk to people, as many people as you can, about what you want to do. You'll be surprised by how many people that also want to do the same thing you're doing, but don't know the next step. Be that next step, find deals, and then tell people what you're looking for. So if you're talking about a project, yes, commercial real estate, you probably need 30% down, 20% down, but then also legal fees and then holding costs, everything else. And then you'll raise that capital, find these lenders, and you start taking the next step. And then quickly, you can keep repeating this. This is very, very scalable. Don't get caught up in doing property management. Just do asset management, high level management of each entity, and do the next one and next one and next one. And pretty soon you'll find yourself creating this generational wealth where every single time you refinance or sell in 3 to 5 or 3 to 7 years, it makes a huge, huge difference for you and your family.
Thank you. Do you find that your name actually, because your name is Jesse Sells, do you find that name really helped you to first become like a self-fulfilling prophecy of, Jesse Sells, like he, closes sells, as opposed to, let's say, if you were named something that was unpronounceable and even ugly in in English, because let's say if you came from somewhere else and, your name was, something like Dick Shit, which I have seen some people are, that's their real name. And maybe in their language, that sounds really good. But, do you find that you are favored by this particular name? And for people that, let's say, don't have such a great name as you have, do you recommend that they change it?
Well, I think it does help, of course. It's better than Jesse Fails or something else. I've gotten a lot of sales jobs based off of it. I didn't know how to sell anything, It does help. It also helps that Jesse, I tell my, shouldn't be saying this, but my head bookkeeper, sometimes she'll call and say her name is Jesse because it's used by both sexes. So it's awesome for me that she can handle that kind of stuff. So of course, but there's always going to be something that you think self-limits you. And I think there's ways around it. I know a good investor. Her name's Abcde. ABCDE. I don't know who named her, but she is excellent. One of the best investors I know personally. Yeah.
Very interesting. Thank you. What habits, apps, or routines would you recommend a property entrepreneur to have in order to build generational wealth?
Yeah. I think the most important habit for anybody that's looking to entrepreneurship, to grow your business, to build your network, is to just not shut up. You need to be talking about what you're doing. You need to be passionate about what you're doing, going to events, and study. It's, again, I go back to that almost imposter syndrome where when you first start out, and I have this too, raise my hand up, right? Where I go to these events and now I'm talking to billionaires, and I was a kid that was taking baths in horse troughs when I was a baby, right? Like no running water. And now I'm sitting there, these fancy dinners where I don't fit in. And I have to kind of keep my stuff together and realize that I do deserve to be at this table. And I think that's something we all have to recognize and realize, that we all have value, and how we put that out there, how we put ourselves out there. So one of the most important things I think for anybody to do is to just be passionate about what you're doing and take that next step.
Thank you. What are your top 10 commandments for building generational wealth with impact investing?
Oh, top 10 commandments. That's a good question. Okay. I don't know if I'm going to get through all 10. Have a routine, I would say, right? So I do a lot of time blocking, right? Make sure I have set up time for studying, set up time for emails, to set up time for working out, because I always want to make sure that I'm on the cutting edge of what's happening each day. So I follow the 5 a.m. book club, get up at 5 a.m. every day, work out, and then spend 30 minutes to an hour just studying what's going on in the market. Be a good leader, right? To your employees, everybody, especially with impact, I'm mission aligned. So everybody on my team, everybody in my company, all understand the mission, what we're doing, what we're trying to accomplish, the next steps. You'd be surprised what your own employees do that may be a great accountant, but then also comes up with this brilliant marketing campaign, because not who you think would be, but Ray Dalio talks a lot about that. Everybody should have a voice. Network, get out there, and the law of reciprocation, right? Provide value to anybody you meet, and it will come back to you. I'd say is another big one. Holy cow, 10 of these, huh? I'll do one or two more, but and provide value is not only, especially in real estate, right? We forget a lot of times that we live in an ivory tower. I call it that, where I have partners that are all Harvard and Harvard grads, and they're brilliant, but they have no idea what it's like to live in an apartment complex, and they have no idea what it's like to live paycheck to paycheck. So we need to get out of our ivory tower and go down to the properties. I go at least once a quarter to each property we own. I say hi to leasing agents, ask them what their opinion is, and a lot of times they're right. I'd say the majority of the time they know better than I do, because they're on the ground and they know what's going on. So listen to everybody is a huge one, and take input and take it well. And last one is, I would say for me is to be humble. I did a presentation at a conference the other day, and this lady came up to me afterwards and said, "You need help on your presentation." I thought I killed it. I thought I did a great job. But she was right. And then she started giving me tips, and I was like, holy cow, random 80-year-old 4-foot-nothing lady. And she schooled me, and like the next presentation I did much, much better. So it's hard, but you got to be humble and accept feedback from wherever and whenever you get it.
Thank you. What are the best ways to build relationships that will lead onto you building generational wealth?
Yeah, I think this goes back to that law of reciprocation, where they provide value. I see this all the time when I go to conferences, especially as we get bigger and bigger. And for example, our current fund is $300 million. We're looking at bigger and bigger projects. When in the beginning, I used to hate people that drove a brand new F-150, because, how dare you be that rich person in town? Couldn't imagine having that much money. And then now I'm talking to people about investing 10, 20, $50 million at a time. It's the law of reciprocation is when you talk to somebody, they're used to people coming out to you and saying, I'm this guy and I have all these accomplishments, and they check out. What I would prefer, and what works best for me when I go talk to somebody, is I offer value right away. I offer to get them a copy. I look up who I'm talking to. I try to make a connection and provide, hey, have you talked to this person, and build their network out. And then it always comes back in the end. So I think that's the best way to get your name out there, the best way to network, to build friends, and to grow your business is by following that law of reciprocation. It's not all about you.
Thank you. What's the best way to have the highest ROI while keeping up with your mission of creating a real impact?
Great question. And I get this all the time when I talk about impact investing in real estate, because you get some people that, oh man, that's a lot of work to work with all these charities. And are you a charity? And And the problem with being a charity is once you're out of money, right? You're constantly asking for more money. That makes sense. So we're not a charity, right? And we're for profit, and we're for profit for a reason, because we want to keep doing this. I want to affect millions of lives. That's my end goal. That's my vision. But the thing is, they're not mutually exclusive, right? You can have profits with a purpose. So by providing all of these, we call them wraparound services, right? Providing support for our residents, it actually increases our ROI for our investors. So if you look at a real estate property, the biggest expense overall is turnover. How many people are coming and going every year? That's usually 40 to 60%. After COVID, it's closer to 50 to 60%. It's getting higher and higher. So by providing these wraparound services, by providing emergency rental assistance, mental health, by providing food when things would go wrong, food services, daycare services, so people can go to work when they can't. By providing all of these things, we find that our turnover goes way, way down. In fact, most of our properties sit around 30%, which is amazing. So because of that, now our ROI is much, much higher. We have more people that are paying on time. We have more people who have better jobs. We have more people that want to stay there because we're boosting their credit. We're helping them find homes later on, which you think would be, antithetical to our purpose, right? Because now we're helping them move out. But because of that, we have more of a community where people want to be there, where they're safe, and they can have a clean home and live in an affordable place. You don't have to deal with crazy people, drug dealers, parties, all the stuff that you usually see in these Class C communities. If that makes sense.
Yes. Thank you. Tell us, what are the top principles to build a superpowered team of builders, agents, any other types of people you may need in order to make sure that you are delivering the best possible, most efficient service to the communities you want to serve with your property investing?
Yes. I'm very passionate about this, actually, because I've gone through it so many times. For me, the best principle for building and keeping the best team is realizing that some people aren't worth it. So what I mean by that is there are some people that are fantastic brokers, fantastic underwriters, fantastic at building relationships, but they can be a poison to your team. They can be a poison to what you're trying to achieve in the end. They just don't fit. They just don't fit your culture. It's better to get rid of those people and find somebody else. When you look at it too, if they don't fit your culture, they're not happy, it's better to let them go and find somewhere else that they will fit the culture and be happy. So even if you have a high performer, you're tearing down your team, because that's how they treat everybody else. If that's how they are, they're always negative, they're always arguing, HR nightmare, whatever else. It's better to have people that believe and follow the dream, the vision, and it's aligned with who you are and what your company's doing, that maybe aren't the best in the world, but the second best in the world, than it is to have the best person who's tearing everybody else down. So get rid of the bad people early and keep focusing on what matters.
Thank you. Tell us your top 3 case studies of projects you have done or projects you have helped other entrepreneurs do that were incredibly successful.
Okay, yeah, absolutely. First one comes to mind. We have a property in Tulsa. We bought it a little crazy here, 245 units. We bought it and it was about 45% occupied. Awesome. A lot of work here. Bought it right before COVID. Sweet. Bad time to buy. Actually, we had our lender there go under. One of the lenders that got caught up in all that stuff, and they went under. So nightmare from different angles. But even though we had different nightmares where all of the logistics issue, where also lumber tripled in price and everything else, we're able to take this property from 45% all the way up to almost 90% occupied within a year, increasing the NOI by 500%. Again, we're partnering with the government, so it's low risk, high return. For a lot of that, we had 60-something people on a wait list at a time there. So we were quickly able to fill it using Section 8 and other government subsidized rents there, which created this massive return on investment for our investors and made a huge difference there. We ended up coming out on top there by quite a bit. Another one would be a property in Fort Worth, 180 units. This was a second chance property before we bought it. True story. During closing, we had a murder on property. Great, right? What are we getting ourselves into? Again, first day, First day, we close on the property. I'm walking on the property. Hi, I'm Jesse. I'm the new owner. SWAT flies by. Oh, God, right? Absolutely insane. I ended up walking over there. I'm an idiot. I spent too much time in the military, so I was out there with the guns drawn, battering a ram. I'm out by the window yelling at the guys, just flush it, come on out. I don't want to pay for a new door. So this property that, was rough. We couldn't have events. Like every event that we would have or before we bought the property would turn into like fist fights and like Latino King or Latin Kings, whatever it was spray painted on walls. It was a rough time. But within 6 months, we turned that property completely 180, completely around. Where now we're having events where kids are playing in playgrounds, we have massive pool parties, barbecues, we have food trucks, and the environment completely changed. And that's what I tell most of our managers when we buy a property is, everybody's going to hate you for about a few months because now there's rules. Now we're holding people accountable. Now you can't do drug deals. You can't have people breaking the law. We can't have SWAT flying on property. But then at 6 month mark, it's going to be like a snap, a change. Where now, people are going to be like, holy cow, like I've got a good night's sleep for the last 2 months. I didn't even realize there's always people screaming all night at each other and fighting, and that's gone. Also, when we see kids playing outside, the comfort level completely changes, which is just absolutely amazing. And it's amazing to see that for people for there and, amazing for the community. So that property dropped from the crime went down 75% in a year. We had a lot of larger property, elementary school nearby. Because of all the work we did, that school actually, its rating went up too, because now people weren't moving as much. They had better, kids were getting rides to school instead of skipping school when it rained. It's absolutely amazing the impact you can have by just really focusing on the residents.
Thank you. Which KPIs, which key performance indicators should an entrepreneur measure when they are trying to build generational wealth?
Yeah, absolutely. Oh man, I've got a lot of KPIs. We actually weigh them too for what's more important to the health of the property. If we're talking about commercial real estate, we're talking about apartments, mobile home parks. Of course, it's occupancy, it's turnover, how many people are coming and going, it's collections. And again, that turnover is your biggest expense, right? So if you focus on that, how many people are leaving and why they're leaving, and you can fix that, that's going to be the biggest indicator for how healthy the property is. And then make sure you're getting the collections on time and providing the support they need if they can't do it. Another one for me, again, because I want to keep people there as long as possible. So it's, for me, I measure work orders. When they came in, how fast we got to them. Even if we're waiting on a part, I want to see that, hey, we reached out and said, hey, we're waiting on a part. Here's a space heater if it's the winter or something for now. And then we'll get as soon as possible, right? So we want to provide as much accountability to our residents as possible, because at the end of the day, we're even more accountable to them than they are to us.
Thank you. Which personal fulfillment key performance indicators do you track? For example, you talked a little bit about, the dangers in the area and, the general feel of the area. Are there other key performance indicators that you measure that impact the return on investment?
Personal ones for me. I think, so for the impact side, this is a new thing. We were doing it for a long time, but now we're starting to track it, actually report to our investors, here's how many pounds of the food drive we've been giving out to our residents. Here's how many business education courses we're giving, ESL courses, whatever it is. And that's what really makes me happy is, the metrics we can show of what we're actually doing and what we're actually achieving, and that's unique to us. I don't know anybody else that tracks what they're actually giving their residents. They always track, of course, here's how much income, here's how your ROI, here's your IRR. Of course we do that. And of course that's important, right? We're just as good, if not better, because we outperform because of everything we do for our residents. But what makes me happy is the impact we have on the lives of our residents. I want to see that the school's ratings going up. I want to see that people are happy and staying longer. I want to get all the guest cards or the reports from our residents saying how happy you are that that the playground's been installed, that the pool's now open, that the way that their managers are treating them. That's what makes me happy.
Thank you. For those people that want to build generational wealth, and let's say they are not as charismatic as you are, and they haven't won the genetic lottery in the same way that you have, what would you have them do so that they can still gain the same level of, to attract the kind of deals and opportunities that you have done as well, of course, with a lot of hard work? What should they do in order to, become more charismatic or become more successful or make up for their shortfall?
Yeah. Someone told me this once and it blew my mind, right? So there's some things I'm really good at. My last name is Sells. Evidently, that's a huge bonus. Lily, thank you for that. Yeah. Yeah, nodding your head. I love it. So there's some things I'm probably an 8 out of 10, right? And there's some things I'm a 2 at. So I met with a mentor. I have a lot of mentors. I'm a big believer in the mentorship, going out there. But if you're a 2 at, let's say, raising capital, right? You're just not very good at that, but you're very analytical and you have great people skills and you think you could handle this side of the business, because there's several sides of commercial real estate. I don't think, and this was my mentor's thing to me, he said, Jesse, you're being an idiot. Don't focus on that 2 and get it up to a 5. Take that 8 and become a 9. Become the best ever at this, whether it's capital raising, managing the property, creating these different impact programs. And don't worry about this other thing. I hate spreadsheets. I can read them. I've read thousands of them. I understand them. I'm not going to be the guy that creates them, though, right? And I shouldn't. I shouldn't spend my time getting better at that. If you have a deficiency at some part of the business, great. Focus on what you're good at, get better at that, and then find partners. That's the best thing about commercial real estate is there's trillions and trillions and trillions of dollars of real estate. So it's not like somebody can take your idea and buy all the real estate. It's very community driven. There's a ton of people that want to work together to help you succeed. So find the right partners that can help you in those deficiencies where you work good together, and then build on what you're good at.
Thank you. What are the best lead generation strategies, especially now with AI? Are there any particular AI tools that you're using to generate the best possible deals for property? Or are there any other traditional methods that you're using that you find are very successful?
Well, that's a great question. So with AI, there's a lot of things. So especially for retail investors, that's your standard coming at 25, 50, 100. LinkedIn works pretty well. So there's a lot of different AI which help you scrape, which will help you automate messaging through them. LinkedIn's kind of cracking down on a lot of that. We're getting away from that because now we're going for higher ticket people. But I still use AI to research them. So I don't know if you know this, but in ChatGPT, if you pay for it, you can get, hey, tell me more about this person. What are their likes? Anything you put out there on the internet is on the internet, and then now can be scraped by an AI. So now I go in these conversations and I can quickly find common ground because I read their bio and I know everything about them and analyze their books or whatever else. So now my research into somebody that usually takes hours and hours can take me 30 minutes to really know who this person is and find common ground. Lead generation wise, LinkedIn's been great for us. Doing Eventbrite webinars have been great for us. But I think in this day and age when everything is online or Zoom, I don't think anything beats meeting people in person. You have to create that relationship. And real quick, Lily, one last thing on this. When I meet people now for our investments, right? And in the beginning, I thought I need to know every detail about this deal, like the IRR and the business plan and how much we're spending on landscaping. So I went in there, rigid, and all of these people wanted to know is, who is Jesse? What is Jesse about? Can I trust him with my money to make a solid investment? Yeah, you need to know the details. But I also have underwriters that know all the details that can pull into a conversation, right? So the most important thing, I think, is at the end of the day, with all this AI, with this separation that we're having, it's just being a real human being and creating relationships the old-fashioned way.
Thank you. What's the best way to find ultra high net worth individuals that may have the kind of properties that you want to buy, sell, or do deals with?
That's what I'm hoping I'm figuring out here. So we're actually growing into that area. So we're working through that. Right now, we're going to a lot of conferences, a lot of meetups. They go to these events. So I'm constantly on the road right now, going to these events to meet these ultra high net worth individuals. There's also RIAs, broker dealers that work with these guys. there's a lot of different avenues to reach out to them. Different approach though. If you go through an institutional, it's vary by the numbers because it's a business, right? Family office, it's a conversation. They want to get to know you. It's slower. It takes more time to develop these relationships, which could be 6 months to years before they invest with you. So it's a different kind of strategy when you look at these ultra high net worth individuals. But for finding deals, a lot of these are LoopNet brokers. That's where we're finding most of the deals right now.
Thank you. What's the biggest mistakes entrepreneurs make when trying to build generational wealth?
Trying to figure it out by yourself. That's the simple answer. The biggest mistake we've made is, I knew flipping homes. I knew, how to sell or buy, but I didn't know a lot about mobile home parks outside of the basics, So I had this great idea, and if I had a good mentor who's been in the market forever, he would have told me, hey, shift, or she would have told me, hey, shift your idea 2 inches to the left. I would have been 100% successful. Instead, I lost about $1 million in valuation on the property. Ouch. Huge learning mistake, something that will never happen again. But once again, that's why I believe in mentors, finding people with experience and what you're doing and what you're not doing. So you can learn from them.
Thank you. What's the biggest secret to your success?
Stubbornness. Yeah, I think that's it. Yeah. At the end of the day, being stubborn or not giving up, it's not a guarantee of success, but giving up is a guarantee of failure. So no matter what, we have to keep moving forward, even when things go wrong. Right now, the market's crazy. I see a lot of family offices, institutional people have lost a ton of money. They're folding back. They're getting more conservative. But you have to keep moving. If you don't keep moving, if you don't find a different way to do things, like right now we're doing low risk, high return government-backed deals because it's a little bit different. Now, 60% of our investments are government-backed, which makes them super low risk. So now we can still transact. We can still do deals when everybody else can't do anything because development is down at a 10-year low. No one wants to buy anything because no one knows what's going on. Are we going to a recession and depression, or is everything going to work out just fine? So you have to be able to pivot, but never give up on what you're doing.
Thank you. What's the best way for people to find you?
Perfect. Yeah, so you can find me on LinkedIn, Jesse-Sells, Instagram, the Jesse Sells, or at our website, impactgrowthcap.com.
Thank you.
Follow us for more interviews with world's most influential business titans, providing you with the insights to awaken to your full potential so you can get paid to be yourself, find true happiness, and manifest anything you desire.